test it.
You got a focus problem here. Like,
you can hear me.
I'm just trying to make.
Oh, good. Yeah. Oh, that was good. That was good. Whatever you just did.
But if I lean back, I can't move. This is just 4K camera. It's fidgety. But yeah.
Okay. Oh, good. We're probably going to spend most of our time talking about Creditor Watchdog today. I don't want to steal your thunder, but everybody and guys, Matt's got some thunder. So if you follow him on social media, you'll know about the thunder. You know what, Matt? It just occurred to me. You're the first person from the prairies that we're profiling here on InsurTech Canada. So I love that we have representation from the InsurTech community in the prairies. And you're a Canadian guy, founder of a company called Mobile Advisors. And
every life and health insurance advisor out there, doesn't matter who you are, battles with explaining to every one of their clients over and over and over and over what creditor insurance is and what the difference is between creditor insurance and traditionally underwritten products that you can find within the marketplace, right? And there's not one advisor out there that doesn't wish that they had a tool that could simultaneously, they could pull out of a magic hat that could simultaneously compare the cost of what every financial institution charges for their insurance products to the cost of what it looks like to sit down with a broker and access the ultra competitive life and health insurance marketplace within Canada, right? So Creditor Insurance Watchdogs, that logo and that branding didn't come until after I had decided in 2019 that it's high time that somebody within this industry creates a platform that does exactly what I've just explained.
Hey folks, John Harvey here, sitting down with another founder on our Founders Journey series here at InsurTech Canada. Today I'm sitting down with Matt Inglis, founder of Mobile Advisors and Creditor Insurance Watchdogs. Matt is, for those who follow him, pretty well known on social media for pushing the envelope. He's definitely a disruptor with a big heart, trying to do some special things in the InsurTech space, focused specifically on the creditor insurance space. I'll let Matt tell the story. Get ready for the thunder. So Matt, it's nice sitting down with you today. Matt Inglis. So you're all the way, you're not in Regina, are you? You're just like outside of Regina, right?
Yeah, John, I'm just outside of Regina.
Where, how far?
About 5-10 minutes, small community called Grand Coulee.
Grand Coulee, is that by bike ride or by car?
By car.
By car. Okay, so
Yep.
So that's in a pickup truck with the windows down, dog in the passenger seat.
Yeah, absolutely.
Yeah, cool. Grand Coulee. Where did it get its name? Do you know?
Not too sure. It wasn't that long ago that I decided that it was time to move out of the city and get to somewhere that was a little more quiet and rural. So it's only been about 3 years since we lived out here.
Okay. Sorry, how many years?
About 3 years.
3 years? Where did you live before that?
A small town just east of Regina called Indian Head.
Love it. You know what, Matt? It just occurred to me. You're the first person from the prairies that we're profiling here on InsurTech Canada. So I love that we have representation from the InsurTech community in the prairies. And you're a good Canadian guy, founder of a company called Mobile Advisors. And we're probably going to spend most of our time talking about Creditor Watchdog today. I don't want to steal your thunder, but everybody and guys, Matt's got some thunder. So if you follow him on social media, you'll know about the thunder. And it's Matt Inglis, founder of Mobile Advisors and Creditor Watchdogs. Matt, why don't we start out, just talk a little bit about the history of the company. How did you get started? How did you get into the InsurTech space? Why'd you go out and venture out and have the courage to start your own company? Just tell me in your own words how you got started, your origin story.
Yeah, so John, like most advisors start, we all start off in a career shop of some sort, and some make those career shops destination retirement, and they work for them their whole lives and they're happy. And some others feel like those career shops are like sandboxes, and those sandboxes are just too small. The shoes are too small. We outgrow those career shops and we move on. So with regards to career shops, I sold insurance for a financial institution for the better part of my career. So 2007 to 2017, I was working for a direct distribution channel through a financial institution. 2018, I just decided that, like I said, the sandbox is too small. I can't say the things on LinkedIn that I say today with the compliance regime that come with working with most financial institutions. Again, I just outgrew my shoes. And in 2018, after 10 years, I decided that it was time to form my own life and health insurance advisory. So branded mobile advisors and hit the ground running. Found that it was, it's extremely important to take time when you're branding the organization that you want people to trust. So, we took our time, mobile advisors. I liked it. I'm always mobile. I'm always on the road. I'm always on farmyards. I'm always driving to my clients. So the name Mobile Advisors rang a bell and we ran with it.
Very cool. Very cool. And I think that anybody who's been an advisor, and I know the kitchen table phrase is overused lately, but anybody who's been in the shoes of an advisor knows what it's like to be at the kitchen table, and the job really is face to face. And that's where the moment of truth, that's where the magic happens, right? When you're out on the road and you go into people's homes and they open up and they trust you, and you build a rapport and have a really personal, intimate conversation with them about sometimes things they don't want to talk about, and then try to place solutions and advice into those conversations. So mobile advisors, I think I think anybody who's an advisor, if they're not mobile, they should be. I used to say in my prior life, when I was in branches, I used to say none of our customers, unless the branch was full, which it never was, none of our customers are in this branch. They're all out there. So get out there. That's where they are. So it really is a mobile first role. And so I think the name's very fitting. So you started the company in 2018, Mobile Advisors. You're clipping down the road. You're doing a great job giving life and health advice or advisory services. When did Creditor Watchdog come to be? Tell me a little bit about that, and why the name? Why the name Watchdog?
Good question. Creditor Insurance Watchdog, the Creditor Insurance logo and the Creditor Insurance Watchdog branding didn't come until about 2 years after the idea of what it was meant to represent came to fruition, right?
Okay.
So, every life and health insurance advisor out there, doesn't matter who you are, battles with explaining to every one of their clients over and over and over and over what creditor insurance is and what the difference is between creditor insurance and traditionally underwritten products that you can find within the marketplace, right? And there's not one advisor out there that doesn't wish that they had a tool that could simultaneously, they could pull out of a magic hat that could simultaneously compare the cost of what every financial institution charges for their insurance products to the cost of what it looks like to sit down with a broker and access the ultra competitive life and health insurance marketplace within Canada, right? So Creditor Insurance Watchdogs, that logo and that branding didn't come until after I had decided in 2019 that it's high time that somebody within this industry creates a platform that does exactly what I've just explained, which is simultaneously compares creditor insurance to alternative insurance products within the Canadian insurance, life and health insurance market space. To take a platform that we've created and associate it with our mother brand, Mobile Advisors, felt like it would get a little bit lost in translation. So I felt like it was really important to create some sort of disruptive image of what this platform is and does, and to create a sub brand or a division of Mobile Advisors that has branding that would lend itself to helping Canadian consumers understand what we're actually trying to do, right?
Right.
Okay, Mobile Advisors has a creditor insurance has a creditor platform. Doesn't sound great, but the moment that you start becoming disruptive and associating creditor insurance watchdogs, right? We know that watchdogs are out there to protect people, right?
Yeah.
And that's the persona we want behind the creditor insurance watchdog platform, and the branding is that we're disruptive and we're here to protect you.
I love that. That's there's a lot of depth there, a lot of meaning behind the name. So, and it, like, even, when I hear you talk about that, and that conversation that happens between, what is creditor insurance, you explain that to the average layperson who may or may not have that attached to their mortgage or their loan. That's typically how it's delivered. They probably don't even know that it's called that. First of all, that it's called creditor. I've always found it to be an odd name to call something. And then why life and health, like disability, critical illness, or term life, or universal life is even in the same conversation as that, and why there should be a comparative analysis between the two. And that, I think you nailed it. Like, that's a hard conversation for someone who's licensed to have, and to take a very complex thing and explain it in a simple way. Because we can't take for granted or ever forget that the average layperson doesn't wake up in the morning thinking about their insurance policy. And even if they do, for some strange reason, they don't know the terminology and the nuances and the ins and outs. So from what I've seen from your tool, and I'd love to have you spend a little bit more time talking about the tech and how the tool works, but it is very illustrative, it's very visual, and it's easy to use. And so you can almost, is it fair to say, Matt, that the tool kind of does the talking almost in this case, the creditor watchdog tool?
See, it's one thing to have data that you can compare. It's one thing to have A compared to B, but if you don't have the UX and UI, and if you don't have the interface that gives the consumer the ability to understand what you're comparing, then you're going to get lost in translation. And even with our MVP product out there, we're still finding that we have to fine tune, the product. But what looks simple from the perspective of our platform, let me tell you this: it is 5,000 bajillion times harder to create something that is simple than it is to create something that's complex. Complexity is easier to create than simplicity. So I appreciate the fact that you say that, because to create simplicity in a tool like that is what allows Canadian consumers to not have to spend their time focusing on what the platform actually is versus what it's doing, right?
Yeah.
So we'd prefer to have people use the calculator and already know what they're coming to our calculator to do,
Yeah.
versus being confused about how the platform itself works and functions, right? We want them to get from start to finish in 7 steps and in 30 seconds. And by the end, understand the difference between what they're spending for life insurance through a creditor insurance product versus what they could go and buy that same amount of life insurance from any insurance broker in Canada.
So if we were to capture in a few sentences the problem that you're solving with Creditor Watchdog, the tool, and you correct me if I'm wrong here, the way I see it is you're solving 2 problems. You're solving a problem for the consumer, the purchaser of creditor insurance, but also you're giving a tool to the advisor. So when you were, up at night or staring at your whiteboard back there and contemplating all the problems you were going to solve in the world, what was it where you had that aha moment? You're like, there's a problem and someone needs to solve it, and this is how I'm going to solve it. What was the initial problem you set out to solve in 1 or 2 sentences, if you could break it down to that? And if not, use 50 sentences.
creating creating comparative analysis between creditor insurance and alternative insurance products, because the Canadian consumer has a whole Canadian consumer in this industry has a whole bunch of, how do I say this in a polite way where you're not going to edit this? There are a lot of people fighting against what is good for the consumer. Okay. There are a lot of forces out there that are very pro creditor insurance. And there are a lot of, how do I put this? The Canadian consumer doesn't have much good going for them with regards to anybody out there really caring how much they pay to insure their loans through financial institutions. Let's leave it at that. And there are a ton of organizations that lobby to make sure that that things carry on the way that they're carrying on.
And this could be a somewhat controversial topic or question, but I'm going to go there anyway. What is creditor always a bad choice? Is it like, is it a, it's binary, it's yes or no, or is it case dependent? Because there's got to be a reason why creditor insurance exists.
Yeah.
And would you say the alternative traditional insurance products are always better?
I'll never come out and say creditor insurance is a bad option, right? We'll get into some examples down the road where creditor insurance might actually be more affordable to the Canadian consumer than purchasing a term insurance policy, right? Might as well just get this out of the way right now.
Sure, yeah.
Within every financial institution, specifically to protect mortgage, let's talk about how the creditor insurance industry works within each financial institution. Every financial institution has 3 creditor insurance certificates: commercial, so they use those rates to insure big business loans, big farm loans. And then we have mortgage certificate, and those cost per thousand rates are meant specifically to insure mortgages that are sold throughout that financial institution. And then at the bottom is personal. So that's your personal loans, personal lines of credit. Okay. So let's go back up to the mortgage one, where an instance is, because I don't discriminate. If creditor insurance wins, that's great. But at least the consumer knows. I compare one world to another world. I don't go into the other world and go, oh, this doesn't make sense, I'm going to pull that little piece of this world out.
Right.
Two worlds are colliding here with regards to comparative analysis: creditor insurance, term insurance, critical illness insurance, disability insurance, because we compare all 3 products. But to give you an example, not many people know that every financial institution in Canada has blended rates with regards to the creditor insurance certificate used on mortgages. So a male smoker pays the exact same amount to insure his mortgage as a female non-smoker. Who knows that? No,
Didn't know that.
nobody knows that. So the male smoker, if you go and take a look at the male smoker's cost to purchase a term insurance policy to protect that, he might actually be better off with the creditor insurance because it's blended, right? The female non-smoker and the male non-smoker, or the male smoker, their rates are blended. So while the female non-smoker is getting ripped off and she should probably go and look at insuring her mortgage debt another way, the male non-smoker, his premiums are coming down because non-smoker smoker rates are being blended, right? So there are situations where it is more cost effective for you to purchase creditor insurance. Contractually, is it better? Not really, right? But as far as certain situations and scenarios go, yeah, man, if you love to just suck back a pack of smokes a day and you're 50 with a $500,000 mortgage, continue on with that creditor insurance.
Right. Yeah, because you're probably not going to be able to afford the alternative. So that's a really objective way to look at it. And like to make this very simple, like the way I kind of would sum that up in one statement is knowledge is power.
Yeah.
So you're buying something as important as a life and health insurance policy, you should be informed. And it sounds like that's really the role that the creditor watchdog tool is playing to conduct that competitive analysis. I imagine using some form of AI And there's probably some sort of database that gets updated regularly in the background. I don't want you to give away your trade secrets here. That's not why we're here today. But would you say, kind of just staying on that track for a moment, is this a B2B solution or a B2C solution? And let me preface that a little bit. Could a consumer just go into the tool and navigate their way through it and plug and play and be able to come out with and make an informed decision based on a recommendation the tool is making? Or is it something that should be in the hands of a licensed advisor and just another tool in their toolbox when they're at the kitchen table having that conversation?
Good question. Whether or not this tool actually makes its way into the hands of other insurance advisors is something that we're working on right now, right? Because there are a lot of very lucrative opportunities and channels with regards to distribution and creating centers of influence, right? To answer your question, I think that once we absolutely nail the platform down with regards to UX, UI, understanding, we have some more time to develop, we have more money to put in. I think that we will be able to create a platform that the consumer will be able to understand and relate to and be able to use and engage with us to do their insurance business for them. Up front, do I think we're nailing it right now? No. Which is why I am focused more on, okay, this tool needs to be, it's like somebody holding your hand, sitting down with you and showing you the calculator versus somebody just sending you the link to the calculator saying, here, check this out. The professional that grabs their client's hand and says, hey, you know what? I think you need to have a look at this. This is what this does.
Right.
There's a lot more impact there for the time being than there is the consumer going creditor insurance calculator, click. They might understand, they might not understand, right? We try to put script into the platform. And if you've used the platform before, from the loadout screen to actually getting access to the calculator, we make the consumer have to read a paragraph with regards to, this is what creditor insurance is, and you should read this before you continue on, because if you read this paragraph, your level of understanding with regards to what you're about to experience is going to significantly increase, right? It's like giving somebody the keys to a racing car without teaching them how to use it properly, right?
Right. Yeah, that's a good way to put it. And that again, going back to knowledge is power. It sounds like even just by having that step, you're at least attempting to educate the consumer or the user of the tool before they just dive in and start making comparisons blindly or without some sort of guidance or training. So just to kind of switch gears here a little bit, going back to branding for a second. So Creditor Watchdog, you talked about, the Watchdog is there to protect. I think you've got a passion for dogs. I've seen the dog in a few of your posts here and there. Tell us a little bit about, I don't want to put words in your mouth. Would you say the dog is the mascot or the inspiration behind the brand?
100%. So anybody that's been following me on LinkedIn knows that my dog's actual name is Sasha. My dog, people that have been following me for a long period of time have known, what Sasha's gone through with regards to radiation therapy on a brain tumor to, being my sidekick to, she's an inspiration to me, and she's what keeps me happy in my vehicle every day. So, to be able to bring her into the brand and, create a brand that will always encompass memories of time that I've had with her.
Yeah.
was just amazing. The stars aligned, we had our secondary logo, which is the M and the A.
Yeah.
That fit perfectly into dog ears. We're creating a brand that's called Creditor Insurance Watchdogs, right? So we got the ears of the watchdog, and then I'd asked my freelance designer to see what she could do with regards to making the symmetry of the dog's face look as much like Sasha as possible. And Yeah, that's where it came from. So it's a really special logo.
Yeah, I love that, and I think that probably resonates with a lot of people who, there's certainly no shortage of dog lovers in Canada.
Yeah.
Is Sasha a husky?
She is, I think she's Husky crossed with Shepherd.
Beautiful dog. Yeah.
Yeah.
And how does Sasha like the Regina winters? Because you guys can get some pretty strong crosswinds going through there.
She likes winter more than summer.
Yeah, 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 yeah.
Yeah.
Those are
She wants to be outside all the time. She never wants to be inside. I'm
those husky.
surprised she's not down here right now bothering me to go out for a run.
Yeah, actually, maybe on the next one we should, because I always love to do follow-up interviews. We should bring the dog in.
100%.
Yeah. So,
Yeah.
so really cool. Thanks for that backstory. And it's always neat. I think that's the thing I love about talking to startup founders actually is there's usually a cool story behind every startup beyond it's usually multi-layered. It's usually more than just one reason why they came up with the name. And there's usually a story behind it. And it's usually very deep and personal. And I actually found, especially in the life and health space, in particular, for some reason, life and health space, there's always a personal story attached to why a lot of advisors get into the life and health business, because something happened to a family member or something happened to a friend, or they just have a strong conviction to do right by people. And there's good people all across the industry, but that particularly stands out in the life and health space. And I hope anybody who's listening to this today is learning a little bit about getting a deeper understanding about the difference between creditor insurance and life and health insurance, and that you've created a tool to help educate people. So to get back into, more on the business side of things. So as far as creditor watchdogs is concerned, and then I guess that sits under mobile advisors. What phase would you say that you're in? Are you past MVP? Or, and I know you've talked publicly about white labeling with other companies. Are you in the fundraising stage right now? Can you talk a little bit about the stage of the company right now?
Yeah, so we're MVP right now. I think the interesting part about mobile advisors and the platform that we've built is like this is all bootstrap stuff, right? So,
Yeah.
while money is always an issue and money always makes things go faster, what's funded the build of our platform has largely been my ability to succeed as a life and health insurance advisor, right? So I want to go and raise capital to take the platform to the next step. I hit the road with Sasha. Yeah.
Love it. Yeah.
And,
Yeah.
As far as the platform goes, it's MVP right now. And I think that if you ever think that your product's anything better than an MVP, that you're being naive. And I think that you can always enhance your product. And, before getting into building this platform, I knew nothing about technology. So I've learned a lot through my developer who first built our website. Interesting story. I asked one person on Facebook who she'd get to build a website. She name drops my now current developer. He builds us a website. I ask him some questions further with regards to comparative analysis between some rates. He goes, yeah, we can build it out. That's our step. We actually built a simplified calculator. So what we did is we went and computed 5,000 creditor insurance rates and manually computed 5,000 term insurance rates to make sure that it made sense to actually take the platform to the next step. But I mean, it was through him that I've learned a lot with regards to your product's never done. And if you sit back waiting, if you sit back and hold back your technology or your MVP until you think that it's actually the best, that'll be 5 years down the road, right? So yeah. I like to constantly think that our platform is an MVP and that it'll get better and better and better. but right now it's doing what it needs to do, which is simultaneously compare rates. So yeah,
Yeah.
we just need to continue building it out.
That's I want to pick up on a couple things you said there because you know, and number one, I love the MVP mindset, like almost like a perpetual MVP mindset. And I have a client that just came out of an accelerator program, and that was actually in Western Canada as well. And that was one of the pieces that they emphasized in the program was keep that simplistic MVP mindset, minimum viable product. You're never done, and it almost keeps you on the edge of your seat. And I think a lot of startups use MVP as sometimes a shield, and it almost gives you permission to be like, yeah, we're still experimenting a little bit, right? And people kind of give you a pass almost, but really, why shouldn't we always maintain that mindset? There's no good platform out there. I don't care what space you're in, even outside of InsurTech. Like if Netflix stopped developing their platform, they would cease to be relevant to the average consumer. Amazon, you know, you could name anything that people use on a regular basis. So you're always looking to enhance your program, to create more value for the user, and it should be based on the end user feedback and who you're trying to create value for in the marketplace. So I love that attitude, what you just said about always kind of being in that MVP mindset. I think that's a message that a lot of founders probably need to hear.
Yeah. Our issue now is not the comparative analysis between the two products, but if we're really going to knock it out of the park, it's with regards to how we educate and create awareness to consumers. Because, you know, you create a roadmap to solve a problem, but if the consumer doesn't know they have the problem to begin with, and that's one of the big challenges we're being faced with right now, is that consumers don't even know. And guess what?
Yeah.
Consumers ability and appetite to listen to anything that you have to say on social media, they just don't care. So there's challenges that we're definitely facing, but they're all fun ones that we will definitely figure out how to solve eventually. But yeah, MVP is one thing. Then getting people to figure out how to use it and why to use it is a completely different story.
So you know what, Matt, that might be a good segue into the next question, because it is a challenge, especially a new brand, to break into the B2C space and to capture the attention of the average consumer, and to have a message that is compelling enough for them to stop and care enough to listen. And then you got the listening piece, and then you have to build understanding. It's one thing to get my attention because maybe you said something that was shocking, but to actually get them to pause and to understand, and then to know and believe and kind of go through that kind of change acceptance curve where now you become something that's relevant in their life that they make time for. So I guess the question I'm leading into is, would you say that's your biggest challenge? Like what has, and if that's not your biggest challenge, what would you say has been your biggest challenge on this journey you've been on as a founder so far?
So it is one of the biggest challenges. You know, a fairy tale ending would be to come out with a platform that consumers just run to, right? And say, you know, please call me. I'd like to replace all of my creditor insurance. That's just simply not the way that it's going. I never thought that we would get the Cinderella story right out of the gates with the platform, but man, we just live in a time where people don't trust anything. You know, you go to social media, which is where a lot of people would try to launch something like this, right?
Yeah.
And what do we have on social media right now? We have COVID, we have propaganda, we have negative people, we have opinionated people. Do we really think that a person is in that mindset is willing to allow us educate them on how to save money on switching creditor insurance products to, you know, more viable and affordable, right? So there's a lot of, you know, as I mentioned before, I think 500 times faster than I talk. Right. So, you know, we'll pivot on a dime, and I'm already pivoting on a dime. I'm already seeing that, you know, creating brand awareness on social media is cool, but to create an appetite for somebody to listen to what we can actually do, you have to be very careful about how we position that, or you'll waste a lot of money on social media.
Sure.
Like, we're already pivoting away from social media. We had mentioned that we can white label the platform. We think it's a lot better for professionals. Going back to will the consumer trust the Creditor Insurance Watchdog brand? Good question. This is exactly why we've created a white labeled platform. It's because if a consumer isn't willing to trust the Creditor Insurance Watchdog brand, maybe they're willing to trust a brand that white labels the platform and shows them the platform as a tool that looks like it's theirs, right?
Yeah, absolutely.
So when somebody from a different institution or organization who's partnered with us shows the platform, holds their hand, sits them down, says, hey, you know what? You just purchased a mortgage, or hey, you know what? You've just done some really big agricultural or business lending. Let us show you a platform, or let us show you a calculator that we have access to.
Yeah.
Right. That organization or those professionals within that organization can then run the client through the platform based on a platform that looks like it's theirs, right? Maybe that organization has already created the trust with the individual that they're about to show the platform to, which is going to create a lot more trust and awareness within demoing the platform or running the consumer through our platform.
Yeah. Well, you know what I love about that equation that you just laid out is, this is how I took it: tech plus human plus brand. Because you're taking those things and you're combining them. You've created the tech, and it's a technology solution for insurance, but that's not enough. And even with the greatest social media campaign, do people really care? Insurance is usually a grudge purchase. The old saying in the life and health space is, right, it's sold, not bought. Right. And car insurance, at least home insurance, is bought because it's mandatory. But there's a lot of selling, and there's a lot of human factor involved in being a life and health advisor. And you have to sell yourself to the customer first before they'll listen to a word you'll say. If you just put a pamphlet in front of them or a tech solution in front of them, you're going to lose them in seconds. So that equation is so important, the tech plus human plus brand, because you can't take the human out of the equation. I think you've nailed it there, and I think that's how you're going to get it to the masses, is through the advisor. I think this is how you empower advisors. And the reason I'm staying on this point a little bit is that there's this notion out there that InsurTech is anti-human and that it will replace advisors, or that AI is bad and machine learning is bad. And sure, there can be negative uses for any technology that's out there, but ultimately the tech is most effective, and at least what I'm hearing from you is probably most effective, because again, the average consumer is not thinking about those things in their spare time. The tech is most effective in the hands of a licensed, accredited advisor who's using the tech, and then maybe a combination of their branding, your branding, or whatever the brand message is, to reach the consumer.
Yeah. So with regards to distribution and who we think that can best, exemplify the use of our technology, if you think to yourself, I don't want to give anything away, but I'll give you some ideas. Does every person that ends up with a mortgage that owns a home deal with a personal insurance broker?
No.
More than likely, right? You got to buy a home policy from somewhere.
Okay, sure. Yeah. Or unless they're going to a direct channel or a digital channel.
Potentially, but then you can get it, then you can attack it on the digital side.
Sure.
Second question with regards to another professional that a person has to deal with when they go from from a mortgage to owning a property is a realtor, right?
Right.
So if you think of two levels of defense within the whole entire industry that a person has to deal with prior to them making a really bad or dumb insurance decision with regards to creditor insurance, there's two people, right?
Hmm.
So who would be better out there to say, hey, before you potentially make a really silly insurance decision, you might want to take a look at this.
Yeah.
So I'll give you that on the mortgage side. And then, I mean, if you think about it from the business side, farms borrowing millions of dollars, trusting their lenders, businesses borrowing millions of dollars, trusting their business bankers and lenders, right? We have to think of, who are the people that these individuals deal with that could potentially intervene with our platform before they make bad decisions. Now, we already have bajillion Canadians that have made, to give you an idea, I think there's probably between $6 and $7 billion worth of replaceable creditor insurance in the marketplace right now in Canada. So there's already Canadians have already made $7 billion worth of bad creditor insurance decisions, right? So there's ways to get the old stuff, there's ways to get the new stuff, but it's likely going to be that our technology is presented by a professional that has the ability to intervene in the purchase of the product by creating awareness with our platform. That's right. It's just the best solution. Like I said, do I wish that Canadian consumers would run to our platform online and go, oh my God, creditor insurance watchdogs, these guys are awesome. They're going to save us so much money. But John, guess what? Every second ad on social media says, I'm going to save you money.
Yeah.
And I don't feel like competing with these other giants with regards to AdWords. Forget it. I don't need to. The tool's good enough on its own, right? Yeah. So we'll just I've figured out, after coming out with the MVP and doing some A/B testing with regards to how we're going to do this and how it's going to work. Like I said, man, my fingers were crossed. I'm going to have 400 people call me tomorrow saying, you guys are awesome, and I'd like to call you and do some digital insurance advising. Just wasn't the case. So you know what? We pivot. You realize that what you thought was going to happen is wrong. You pivot because the tool's still amazing. You're just not hitting the nail on the head yet.
And I love that you said that too. That's that resiliency that founders need to have, right? Whether you're a Canadian founder or not, is and forget about a pandemic or anything like that. If you think things aren't going to change, or there's not going to be a snag in the road or some sort of unexpected thing, expect the unexpected when you get into this, right? And you got to have that pivot point. At some point, if the market's telling you something, you can't just bury your head in the sand. You got to listen to the voice of the customer. It sounds like you're tuned into that. What would you say is, off the top of your head, the average savings? Because you talk about the billions of insurance, addressable creditor insurance that's out there. What would you say is the average savings that you come across with a client when you guys sit down and you do a comparison? You guys do an illustrative analysis with the tool. So for like farm versus personal.
Well, let's do this. Let me pull my creditor insurance application up on my phone, and why don't we do this?
Nice.
So
that's a true advisor at heart right there. Always on his toes. He's got his tools ready.
I'll just give you exact numbers, okay?
Yeah. Let's say 29. I wish
go older.
59.
59. What's really important for you to understand is that the older you get, the worse it is. So the older you get, the more money you're going to save, which is a demographic that we're trying to hit.
Okay.
So let's go 59 male non-smoker. Okay. Yeah. So 59 male non-smoker, he's got $1 million mortgage with a financial institution, and he's elected to purchase the creditor life insurance on it. Okay. Bear in mind that the creditor insurance is going to expire on him at age 70, right? So that gives him about 10 years worth of creditor insurance. So that would be comparable to him purchasing $1 million term 10 life insurance policy, right?
Yeah.
If you want to compare an apple to an apple. That financial institution's charging that 57-year-old or 59-year-old male non-smoker $9,480 a year for insurance on his loan.
Mm-hmm.
A term 10 life insurance policy for $1 million, $4,230.
Wow.
And that's not even the most competitive term provider. That's just the one we're calling right now. but you could probably get the term insurance into, into the 3,000s. So you've just saved, it's, if you want to put it into an emotional context or emotional perspective,
Yeah.
You think that this Canadian doesn't have anything better to do than pump the share value of this financial institution
No.
by making this switch.
Mm-hmm.
And if we take that constant savings every year over a 10-year period of time, that 59-year-old who is then 69 has put away enough money to put one of his grandchildren through university just because of a simple insurance decision.
Yeah. And you know what I've never understood, and I might edit this out, Matt, but a lot of these same banks, or let's just say institutions that are selling the creditor insurance also own life and health companies and can sell you a more competitive, comprehensive product that gives you better coverage for less money.
Yep.
But we have things like the Bank Act that maybe those are excuses, right? To say, well, we can't talk about it in the branch because you're in the bank branch and that's an insurance issue. But there's got to be better ways to inform consumers. So I would say the public should be thankful, the industry should be thankful that there's a tool out there like this. That's another question I wanted to ask you, Matt. I'm not aware of a tool that does this. Is this, are you the first? Are you the first in Canada that you know of? What can you tell us about that?
First one in Canada by miles. And you think about reasons as to why this platform or why this technology has never been developed. Who doesn't have their foot in the creditor insurance industry, right? Mm-hmm. So it took a David to go after Goliath because Goliaths play with other Goliaths, right?
Sure.
So,
David and his dog.
Yeah. David and Sasha versus Goliath. And we're just sitting there poking Goliath. Poking. Yeah. It took a true independent advisor and somebody that thought that this would be fun, because at the end of the day, from start to finish on jumping on the creditor insurance rabbit hole, it was mind-numbing 2-year process to figure out, to actually understand the landscape of the Canadian creditor insurance industry. Mm-hmm. I'm probably considered if you stare at information and numbers long enough, you create some really compelling opinions. But I mean, I would consider myself an authority in the creditor insurance realm now. It's been 2 years of trying to figure out how to do this properly, right?
Right. Well, and you know what? Some might say you're poking the bear. I say you're advocating for the consumer.
Slapping the bear.
Well, hey, listen, I'm not, you speak for yourself, and, you've got some strong messaging out there, and let's face it, that's the elephant in the room. But, today's about what is the mission of the company. Today's, about profiling what you're doing as a Canadian founder to make, help consumers at the end of the day make better decisions, and to empower advisors in that cause and that mission to empower consumers at the end of the day, and put some more money back in their jeans. Like, that's a compelling business case, if you ask me, and you're proving it and you're doing it. So first in Canada to do this, as far as you are aware, what would you say to Canadian founders? And by the way, you're in this podcast series on the founder's journey, you're the second Canadian startup founder that started as an advisor that we sat down with. And for all the advisors out there who think they could never leave the sandbox, or they could never be courageous enough to go out and do something like this, what do you say? What do you say to them, or even an outsider who's thinking of breaking into the industry because they've got a great idea? Because part of the objective of this podcast, and then I'll shut up, is to encourage Canadian founders, people who have great ideas that the insurance industry needs, and in particular involving insurance and tech, to bring those ideas forward, so that we can advance the industry in Canada and abroad and be a global player. So what would you say to someone who has a great idea, who's sitting back and thinking, I can't do that? You started as an advisor. What would you say?
There's nothing money can't build.
Yeah. And if you got energy and some big boots, right? And you've got thick soles on your boots too.
When I started realizing that this platform was actually possible is when my developer looked at me and said, there's nothing you can't build. So if you can think of it and put it on paper, tell me what you're thinking and we can build it. And that's when I realized the possibility. I think people tend to think that things can't be done. And the reality is, with regards to technology, is that there's nothing creativity can't build. There's nothing money can't build with regards to developing technology. Like literally.
Okay.
It might not exist yet,
Yeah.
but to give you an example, a creditor insurance calculator that simultaneously computes creditor insurance and compares it to alternative products of equal coverage. You ask anybody 2 or 3 years ago if anybody would ever have the ability to build something like that, and they would say to you, no, not a chance. You know how much work that would take?
Yeah.
I've created something that didn't even exist and shouldn't even exist and it was an idea 2 years ago. Now it exists. Now it's a platform.
Yeah.
Now it's ready to disrupt and I hope to God Canadians realize the importance of this tool. Every Canadian's a skeptic, but I mean,
Yeah.
I hope Canadians start using it, because this is a super pro consumer, pro Canadian platform. But if you can think it, somebody can build it. If you're talking about technology. So if you have a great idea, trust me, if you link up with a developer that's talented, there's nothing that a developer can't build you.
Yeah. Yeah. And we could probably do another interview on the path to finding talent in that space. And there's so many founders that just need a good technical developer. I think that's a good way we talk about founder, co-founder relationships. Not that every developer is a co-founder, but to find someone that's complementary. And as a founder, it doesn't mean you have to have all the answers. You might have the concept and the idea, but you don't know how to bring that to life. That's where the developer comes in, right? What couple things, follow-up questions on that? Yeah.
Right. Anything that you can think of creativity in a creative sense in here, anything that you can think of building in here, providing that you have the ability to relay what you are thinking creativity in here, can be, so long as you can reiterate that properly to somebody that understands you and is on the same page as you with regards to development. Anybody can digitize your creative thoughts. That's the best way to put it. You can create, you can digitize your creative thoughts if you can get them out of your head and have somebody understand what you're saying.
Yeah, that's how it manifests into a tool. From an idea to a tool at the end of the day. So that's well put. What couple things here in closing is so what if you talked about, money can create anything, a good developer can manifest an idea. What if I don't have funding? Like the whole fundraising journey, what would you say to a founder? Because you've bootstrapped. Lots of people bootstrap. Is there a tidbit of advice you could give there? Because I think a lot of people think, and a lot of Canadians think, well, I've tried to raise funds. I've knocked on, I've gone to different investors, venture capital, crowdfunding, angel investors, private equity, and no one will get behind my idea. So it's going to die on the vine. What would you say to someone who just has tried to raise funds, but still has that great idea and has all of the other ingredients necessary?
If it's meant to be built, it'll be built. If
So
it's
that,
meant to be built, it'll be built. Be very, very, very careful about developing technology, because building technology is very much like building a house. And if you really screw up the blueprint of a house, it's no different than screwing up the blueprint of technology. So baby steps, right? Nobody usually, from my perspective, there were a lot of steps to getting to the end, and each step costs more money, right? So you can find, it doesn't, it's not like I need $100,000 tomorrow to build this thing. It doesn't work like that. There's creative concepts, there's blueprinting that your designs, right? There's a lot of steps that involve money to take whatever you're trying to build to the next step, but it's all incremental, right?
yeah, well, and that's well put. So guess where I was going there too is, if you are a founder and you're trying to get into the insurtech space, or any startup for that matter, if you think anyone's going to care about your idea more than you, then you've got a rude awakening coming. So
Yeah, that sucks.
you're going to hear no more than you
Yeah.
hear yes. I
Yeah.
don't care how good your idea is.
Yeah.
And that's a test of the will. And
Yeah.
that's going to test your grit and your resilience. And it's no different. You have to care as much about taking the risk, putting yourself out there, fundraising, as you did creating the idea. Because the creating the idea is the fun part. Like, that's like, I got a solution. I woke up in the middle of the night. I got this brilliant idea. Now to turn that around and turn that idea into something that manifests into something that's real, that's commercially viable, that can create recurring revenue and value in the marketplace. There's going to be a lot of times where you feel like giving up. And someone made a comment to me. I said, why is Canada a follower nation? Why don't we have more ideas that originate from Canada? And the conclusion, this is just one person's opinion that we came to, was there's no shortage of ideas that originate here. There's a shortage of ideas, though, that actually see the light of day. And there's a combination of reasons that happen. Sometimes you could say it's the environment, the regulatory environment. You could say it's lack of capital flowing, lack of private investment appetite. But at the end of the day, founders have to own some of that too. And you have to care more than anybody else. So how far are you willing to go? And so I think your answer was a simple one, but I think it's one that has a lot of depth behind it, because if you care about it enough, it will happen. But that means you're gonna have to take a lot of risk, a lot of personal risk, a lot of time and energy that's going to be spent on that to get that idea to market.
Yeah, and when you come out with an MVP, then you go from developing a product, and you come out of your basement as I'm like a Bezos, right? I sit in my basement developing an application that's going to help Canadians. There's nothing glamorous about mobile advisors, but you come out with a product, and then you put on the business development hat. And boy, it's an exciting one. It's a very exciting one.
Yeah.
But yeah, because I'm notoriously guilty of being like the yappy chihuahua, because I know what the platform does. If you don't smoke and you're healthy and you've purchased Creditor insurance from a financial institution, our platform saves you money, and that's 10 million people in Canada. But it's, again, making other people understand what you've just done, because my head's been in that space for the last 2 years while I built it, and I know how cool it is.
Yeah.
You got to be very careful when you come out of the dungeon with your MVP, because you don't want to come off as desperate, and being very excited sometimes comes off as a bit of desperation. And I've been trying to be very careful with that, because I can yap on LinkedIn for 6 hours straight and message people.
Yeah.
But it's to dial it in. And and putting on the business development hat, it's a really fun and challenging role. But yeah, it's never ending. And you're always learning every day what to do and what not to do. Don't ever think that you're going to know all the what not to do's. Man, I do 10 what not to do's every day.
Sure.
Just whatever's inside you driving you. One of your questions has always been, where does your passion come from for this,
Yeah.
Matthew? Why do you do this?
Yeah.
And it's because as I dug deeper down into the creditor insurance industry, I became so frustrated with how the industry acts and how few people actually protect Canadians with regards to this industry, right? And just find something that's going to fuel your fire and just let it go. And don't be scared about what you say or what people think. If you truly believe in what you're doing, just go for it. Just go for it.
Yeah. That's some inspirational words there, Matt. I love that you went on that rant there. That's some great stuff there that you just said. And your comment about being like a Bezos in your basement, you are going to socialize that idea. You're living with that idea for months and weeks or years sometimes before anyone else ever hears it. So you come out with the excitement because you found a way to we're using that word again, manifest that idea. But that doesn't mean people are going to accept it right away. And that's something that founders need to be prepared for, is that you might hear a year, 2, 3, 4, 5 years of no's. And how committed are you to this idea? But remember, and anybody who's a leader even, should know this as far as change is concerned, is, this is something new. You socialized this with yourself and convinced yourself over a number of weeks and months and years. Don't expect people to just grab it and intrinsically understand it just because you came out. It's not like you're coming down the mountain with the tablets and the 10 commandments. It's going to take time for people, and you've got to give the market time to accept your idea. And then you have to listen to what the market is telling you, because that can also be a warning sign as well. I love this conversation. The last thing I want to say before we wrap things up is, how many institutions would you say you're able to make when you do your comparative analysis? And again, without giving away the secret sauce, how many institutions are you able to compare to when you do a creditor versus a traditional or alternative insurance illustration?
99% of them.
Wow.
We've got them all. And I mean, here's the thing, the institutions that are hiding, it won't be long before we get those rates as well. And with regards to, that industry trying to pivot or make big drastic price changes, like that's it. The creditor insurance industry is a dinosaur. Like, I've seen creditor insurance rates from 2021, and then taking a look at the same creditor insurance rates from that financial institution in 2011, they're still the same. So there's no appetite for this industry to change. So we'll eventually have them all. And with the ones that we don't have, we've got enough comparative analysis within all the other creditor insurance rates throughout Canada to make very, very, very educated guesses on what we think they're paying. And worst case scenario, if we don't have that institution's creditor insurance rates, for comparative analysis, we'll three-way call with that creditor insurance provider from that financial institution with any client who calls us, so that we can compare what our assumption is to what they're actually spending.
Well, that's putting your money where your mouth is right there. I don't know why anyone wouldn't at least attempt that. I think this is a valuable tool for advisors, for brokers, for anybody in the business who's selling. Again, this could be someone who's looking to diversify their business. Maybe they're just selling P&C and they're looking for a way to get into the life and health space, but it's new.
You just hit the nail on the head.
Yeah. Well, I see the connection there, because there needs to be more of that holistic insurance discussion happening. And there's a lot of business models out there where it's some are dual licensed, some are singular licensed.
Yeah.
And I think at the end of the day, we have to look at what's easiest for the consumer to get the information to the consumer. So I see a big opportunity there. In closing, what would you say you want to be known for? When people hear Creditor, Watchdog, and mobile advisors, what do you want customers to say about you?
I'll keep this simple. I want to be known as somebody who created technology because he cares about Canadians, because an industry frustrated him so much with regards to how that industry was taking advantage of Canadian consumers that he stood up and he did something about it. The only reason that Creditor Insurance Watchdogs exists is because I care about how the creditor insurance industry is treating Canadians and how I see it going forward and moving forward as I watch the stars within the industry align. And I'll leave you with this. The Canadian creditor insurance industry, I believe, is the biggest creditor insurance industry per capita in the world. Nobody in the world consumes more creditor insurance than Canadians. That's a problem.
Wow. Well, you heard it straight from the founder's mouth. So Matt, this was, I usually do a wrap up at the end, but I don't see how I could top that. And, just in closing for us, good Canadian founder, out in Grand Coulee, near Regina, you and Sasha out there looking out for the average Canadian, giving good advice, creating tools that the marketplace needs. If we want to find you online and learn more about Creditor Watchdogs or mobile advisors, how do we find you?
You can find us on social media. You can take a look at creditorinsurance.ca. Right now it's password protected as we figure out what we're going to do with it moving forward. If you want to get in touch with us, you can go to mobile-advisors.ca, or you can email me at info@mobile-advisors.ca.
Awesome. Tremendous. I really enjoyed this conversation. We went over an hour, but it feels like we just got started. So excellent. I had an excellent time. I really enjoyed it. And I look forward to the follow-up discussion to hear about all your successes, in 6, 12, 18, 24 months from now.
And John, I need to thank you too for doing what you do for guys like me, right? Providing an outlet for me to talk like this. It's amazing. Thank you for giving me the opportunity to have this discussion with you.
Well, this is the kind of stuff the industry needs to be talking about, right? So if we can play a role, thank you for saying that and being the voice of the insurtech industry and keep that dialogue and that conversation going throughout the year, then we've done our job at Insurtech Canada. And that's why Insurtech Canada exists, to help founders and to bring these ideas forward that the industry so desperately needs. So thanks again, Matt, for everything you're doing. Awesome.
Thanks.